Accounting itself is an information system. Normally 10, 15 years ago, I remember when I started learning 20, 25 years ago about accounting and things, information system was a big word. ITS, information system technologies, and ICT, information communication technology, and information system. Now, accounting overall is an information system for the business, a very critical part for the business. It collects information from inside and outside the organization and provides this information to the people who need that information. Who are those people? Managers, business managers. So basically they work, especially the management accounting, work for managers. It has no other function. They prepare reports, they do their research, they do their work, they do their technical bits, and when they're done, they don't make the decisions. It's the manager who could be an accountant. Nowadays, to be honest, 90% of the CEOs are the people who have financial backgrounds. Accountants are the backbone of any organization structure. All those small businesses, sometimes they don't really have accountants. They outsource this function to small accounting firms like mine. What are the three primary functions of management or management accountant? The first one is planning for the future. Planning for today, what are we going to do today? That's what I did this morning. Planning, so how many people are we going to need today? How much raw material are we going to need today? How many trainers we need, how much staff we need, and so on and so on. How much we need this for a week, a month, a year. That is planning, or maybe 5 years, or maybe 10 years. What do we need? Successful companies are those who can think now about the next 10 years. They will be successful in the next 10 years, but they will be. So planning is the first step of any managerial role or any management accounting function. Management accounting and management is very linked, very much linked, because the name suggests that this is the accounting which is done, which is carried out for managers. So when I mention these two things, think that it's basically the same thing. When we do planning and we plan to hire 20 people for the next year, or we plan to manufacture product A and not product B, this is planning, and then we need to make a decision. Now, planning is something which supports the decision-making process. You should never make a decision before planning. So that's your first step. But decision-making is the key. They are in isolation. Sometimes what happens, as we will see, that our planning suggests something else, and our guts tells us something else, and then decision is made. Sometimes, mostly based on the guts. But I always tell my students that whenever you make a decision, make sure your paperwork is complete. Always back your decisions with paperwork, because eventually you will be responsible, you will be answerable for your decisions, and you should be able to support that. Okay, this was my research, this was my planning, and that's what was suggested, and that my guts told me, and that's what I decided. So about that, that's what I decided. So decision making. Okay, so and the third one is control. When you make a decision. You make a decision to manufacture, let's say, 1 million units this year. You don't just sit down and expect that we will meet our targets. 1 million units in a year means so many in a month. So you keep a check on your progress on daily basis, on monthly basis, and if you are going off the course, you need to control that. So management is not some laid-back thing. It's a proactive approach. You need to be on top of the things. Don't wait for things to happen and then decide, but you keep a check and you act proactively and you make a decision before something worse happens or things gets out of control. So management is about that. Yes. So for planning, it's first step for decision making, establishing objective and formulating. Your planning, I said daily, monthly, or 5 yearly. It depends on what is the purpose of planning? We'll talk a little bit more in the next slides about planning. So we'll discuss this more, but it revolves around your objectives. You will need information about the past and about the future. You can't really plan without that. Making an informed decision is important, and choosing between alternatives. Yes, this is the tricky thing about decision making, that it's rarely that you have one option. Decision making is about choosing between different options, and that makes life a lot more harder. And you will rarely have only one option. Actually, you would always have different options. Accountants would always give you different options, and you would have to choose depending on how well you understand the information and what your guts tell you. There's a lot in management. There's a lot about your guts. However, when we make a decision, we base it on our analytical abilities as well. So your gut tells you about how you analyze the situation. We are not born with analytical abilities. There are certain, but these analytical abilities can be enhanced. Just like you can learn math by practicing it more, you can be more analytical by doing this again and again and again. Correct decisions are made on the basis of your learning made on the wrong decision. So every wrong decision teaches you something. So that is worth remembering. So we will even ask you in this course to make decisions, just to give you some practice on decision making is the key, but never shy away from making the decisions. And control again, what we hoped for and what we are getting. Our plans versus our targets and our results are important. If we talk a bit more about planning, there are 3 levels of planning: strategic, tactical, and operational level planning. So depending on objectives, in different layers of hierarchy in an organization, managers have different objectives or different functions. If you are a managing director, if you are a CEO, or if you are in a board of directors, your responsibilities would mostly be strategic. And that is about thinking what is going to happen in the next 5 to 10 years, what are our objectives in the next 5 to 10 years, and how should we deal with them. To give you an example, if a company, if it's a small company, they need to think about where they would like to see themselves in the next 5 to 10 years. So let's say there's a company and there are only few shops in Bristol, and now they want to, franchising is a really good way of looking at it, and then they want to have at least 20 shops around Southwest in the next 5 years. So that's their vision and their strategy. That's their objectives. And that could be 100 all over the UK. So when you talk about this, these are your visions, and what you need to see, on what basis this decision is made, or this planning is carried out. You can't just do this because you want to. What you need to look into, that what is the future outlook of the economy, of the political scenario. I don't know if you have heard about PASTEL analysis: political, economical, social, legal. So they need to be aware of those factors, and only then they would make a decision which would fit them. I give you a good example, another example, and that is Coca-Cola. If you're working for Coca-Cola, what do you think as a board of director, what would they be thinking now? In what's going to happen to Coca-Cola in the next 5 to 10 years? Not good. We don't see good things happening to Coca-Cola in the next 5 to 10 years, as has happened in the last 5 to 10 years. If you look at their numbers, 5 to 10 years, they are going down because people are becoming more aware of sugar, the problem with the sugars and their diet and so on. So Coca-Cola, they are aware that they don't see their future in that specific segment of fizzy drinks. It doesn't look good. So these are the people who are actually responsible for thinking like that. How does the future look? If it looks good, then they would carry on, they would expand. So there are companies who are doing that. For example, you can think about Apple, Amazon, Tesla, and Nvidia. These companies, they are expanding because their segment is going to have more and more possibilities in the future. For example, now Facebook is started selling through YouTube and not YouTube, their own version, and Google is trying to sell through YouTube. So these are, but Coke, what are they doing? They have bought Costa. Do you know that? Now Costa is owned by, so they are diversifying. So that's what a strategy look like. That's what strategic planning look like. That okay, we are not going to be doing good in our own business, so let's diversify and do other things. It's long-term planning. Maybe in the next 20-25 years, the fizzy drink segment would become very, very small, and they would have other things, and they may not even exist. That happens. Companies die after 250 years. Yeah, they have a long life with it. But that's what the strategy. Once this decision is made that, okay, now we want to have 20 shops in the next 5 years in the southwest region, then you ask your tactical level managers, middle level managers, area managers, country managers. These are the people who are middle level managers. You ask them to break the plan down into bits. So what are you going to do in the year 1? What are you going to do in year 2? What are you going to do in year 3 and 5? So for example, if I own a shop and I would like to have 20 shops in the next 5 years, the first thing would be that I would say that, okay, my target is to open 2 more shops in the next year. Now, how am I going to do that? I would need money, I would need people, and I would need raw material or finished products. Do we have money? That is the main question. When strategic planning is done, this thing is considered there. This is their responsibility to provide cash. Middle level managers, they don't have access. So cash is given, or cash is provided by strategic level management, and then the tactical level managers' responsibility would be arrange resources, people, train people. So we will need 2 more managers in the new shops. So let's train 2 more managers. We need 2 more assistant manager, and then maybe 10 assistants. Let's start training those people. Let's start having more people in one current shop, and then start doing that. This is all tactical level planning, okay? Okay, suppliers. Currently, we sell 50,000 units a year. We have a supplier. Can they actually supply 100,000 units more next year? Okay, let's talk to them. Let's negotiate with them. Let's negotiate more prices with them because now we're a bigger company. If they can't do it, you're going to have to look, because every company has their limitations, and we will learn this about. Sometimes you want to expand, but you can't expand because you don't have resources. So then they will start looking at other suppliers. So these are a few examples. I can go on and on about this, but just to give you an idea on how the strategic planning would look like, or how a tactical planning would look like. There are questions in exam on MCQs asking you to identify if a certain decision is a strategic planning, a strategic, tactical, or operational planning. So once we are done, then with that, then this 1 year planning is communicated with the operational level managers. These are shop managers, these are foremans, these are line managers on a factory. They know a planning to a year, and that would know that these are the number of units we need to sell or produce. These are the people we are training. This week we will be training this will that, and the next week we will be training that, and so on and so on. So that's how we break down the planning. When you're a manager, then your manager, you have a responsibility for a responsibility center. So if you are, so you will either be a cost manager, and most of the managers, that's what their job is, to reduce the cost or to maintain the cost of their department. HR, for example, production, training, research and development, they all have cost budgets for them. And a good manager would achieve their objectives or targets within the given money. Yeah. Whenever you're managers, you would know what is the budget for your department is, and then you are a cost center manager. Sometime, and this is operational level management. Yeah. For profit center, you would be responsible for income and expenses both, sales and expenses both. For example, if you are a shop manager, you could be a profit manager. You would be responsible to achieve a profit target. Now you will see that in future, in the next few classes, we would actually calculate on how to do that. If your management tells you, higher manager tells you that, okay, this year you made a profit of 200K. Next year you need to make a profit of 250K. How to do that in numbers? What you need to do? How to break it down? We will teach you in the next few classes. So you could be, that could be again an operational level management, but this could be a tactical level manager. So area managers, for example, these are the people who are responsible to show the profitability of an area. For example, wider London area, or southwest London, or southwest or southeast, like that. Or an investment center. So if Tesla invests in Germany in the factory, they're making a factory over there, or Disneyland is coming to UK, so this is their investment, and they would have a person, a tactical level manager, middle level management, who would be responsible for the whole investment. And again we will learn this, when an investment is made, before that some calculations are carried out by the accountants with all the research and things, and then they say that after investing this, our return, our profit would be this much. So investment level managers are responsible to achieve those targets. So that's investment center. And the revenue center, I give you an example again. If you're responsible to manage sales of a factory or a business, so normally sales manager, marketing managers, these are the people who will be responsible for revenue centers, and they will be given targets, and then they will need to achieve those targets as their responsibility.